Hello, good morning. It's a simply glorious Friday the 31st. I'm FX Plu and this is the month-end morning brief. So do you remember how the government election manifesto and the budget just before lockdown both pledged to end austerity? Well, of course, COVID helped ensure austerity is dead and buried because to deal with the recession, we need to foster economic growth. Stimulus needs to be pumped into the economy and cash should be made available for the public to spend in order to ensure that retail sales remain solid and the associated supply chains are well supported. That's the plan though, and it sounds simple enough, but we saw a warning shot from the banking sector yesterday as Lloyds announced that they're adding £2.4 billion to their bad debt provisions. That brings their provisions to £3.8 billion in total, and that spooked the markets a little because other banks will likely follow suit. But sterling was relatively unaffected by this, and the pound continued its recent rally to just over 131. This continued again overnight, and we opened this morning around 131.30 against the US dollar. US preliminary GDP showed the economy contracted by 33% between April and June. 33%, that's a third. That's way beyond any market expectation and more fool anyone who questioned Powell's call of a long, deep recession. Not necessarily because he's a soothsayer, but he does see this kind of data ahead of time, but still. The current unemployment support bill expires today and we still haven't heard from Congress about the much needed replacement. Perhaps today will be the day though, because remember, if it wasn't for the last minute, nothing would get done, right? Trump's been on. He's been talking about postponing the election. Publicly, he stated this is due to concern over fraud with a huge increase in postal voting. Privately, he's probably trying to buy a little bit more time to recover in the polls. And meanwhile, the dollar index continued its descent. We ended just over the 93 level. In the Eurozone, concerns over a second spike continued across Europe. The UK's added Luxembourg to the quarantine list for returning travellers, but this isn't really affecting the euro's ascent yet. Euro dollar opened close to 118.90 this morning. And similar to sterling, it's hard to predict a euro correction at the moment, especially while the US outlook is so bleak. But given how long it's been since we've been at these current levels for euro dollar, the downside risk remains constant. Right, that's it from me. Topping off a good week and a good month. I hope you fared equally well on your side. Join me again on Monday. We go again in August.
If you do not have a clue, then just tweet through and ask FX Blue.